Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 15th of April, 2021. This is episode number 1973. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on our Convergent Trading pre-market summary sheet, we see that risk is back on after being risk off yesterday afternoon. A strong drop following Fed Chair Powell's comments and the Beige Book release. A pretty decent drop and what looked like the beginning of a reversal lower, a rotation lower. Remember yesterday, we're going to go over this in a minute, but remember yesterday, the expectation is that we would not close on new all-time highs, that we are likely to rotate down and remain, remain in range. And so the overnight session, the extended trading hours open back up and immediately start taking a rally. We see that across the NASDAQ, Russell, Dow. Gold has been climbing as well. The bonds and the 10 years have been climbing also. Currently, the NASDAQ is taking the lead again, 132.5 points or 0.96% up. The Russell following close behind, up 17.8 points or 0.79%. The bonds are up 30 ticks, almost an entire handle, up 30 ticks or 0.6%. The S&P is up 23.75% or 0.58%, 23.75 points or 0.58%. And gold is climbing higher, almost $10 or 0.6%. The laggard today is crude. Crude, although having pushed higher, crude's trading at 62.77, moving away from that $60 handle. It is lower. It is the laggard today. It's lower by 39 cents on the May contract, down 0.62%. Copper keeps roaring up 3% this morning. Copper, a very important indicator of manufacturing activity and production. The S&P has traded 170,000 contracts so far, with a range from 41.19.5 to 41.46, approximately 27 points. The inventory on the overnight session in the ES is 75% long, 75% long, meaning, what does that mean? It means that 75% of the volume traded above yesterday's close, and that's how we measure inventory. It is not an accurate or a precise way to determine how inventory is leaning. It is a rule of thumb, so take it for what it is. This morning, there has been a lot that came out. Retail sales in the U.S. came in at 9.8% versus the expected 4.5%. That is the forecast. The prior is negative 3%. Huge boost on retail sales in the U.S. for the month of March. We also got jobless claims. Came in at 576,000 versus 715,000 expected. This is also bullish. Initial claims lower than expected. And we're about to get industrial production. And then later, we're looking for NAHB Housing Market Index, business inventories, Fed's Bostic, and so on and so forth. Everybody can have access to a calendar. I'm not going to cover those things. And so currently, we've completely taken back yesterday's sell-off in the indices, and the ES has put in a new all-time high. Okay, so let's hop on over. Let me ask you something while I have you here. For those of you who attended the webinar, the public webinar on key components for volume profiling setups, if you would just take a moment and just let me know what you thought. Was it too long, too short, not enough detail? I'd love to get your feedback if you attended. The recording will be released today. It'll be on Convergent Trading's YouTube channel. I think it already is, and it'll be sent out to all attendees. I'd love to hear your feedback on that. Having talked about this stuff for so long and been doing it for 15 years, it's hard to say whether I lost the audience, in other words, too much detail and too nuanced or not enough. It's really hard to say because the audience is made up, you folks are made up of many levels of competence and many levels of experience and knowledge. So it's hard to speak to a wide spectrum like that efficiently. Anyway, here's the mess of a map that I drew yesterday. The primary thing to take away from this map is that I expected the market to open, dip down towards that 27 being the key test area. And I was looking for it to push higher into new all-time highs, except that the expectation is that once we push the all-time high, was looking for it to fail back into the range. So the pattern that I was looking for is immediately drop, look for the push higher, take out the prior high, and then fall back in. I did not expect one of those days where it finishes near highs. That's the primary scenario. The secondary scenario is to move up, test the high, fall back in, and then start and hold steady inside of this range from the prior day in the 41, 30, 32 area. If it starts to drop, we're looking for 24 and looking for 14 on a drop. Remember, I drew this arrow here and I said, if it starts to drop, there's weak structure on here, and 41.14. Let me just circle that a few more times. 41.14. Let's see what happened. Here's what took place in our review segment. The action was, if I zoom in, the action was, wow, I need to zoom in a lot more, right, to see what actually happened here. Let's back up a little bit. So we open right here, right at the 41.32 quarter. We push down to 29. Remember, we're looking for 27 for failure to push through, so it can move as far as 27 with support at 27. And then I was looking for it to pop higher. Remember, an impulse up. And there it is. It happens so quickly. It went to 29, impulse up, or a push up above the prior day's high. And then I expect it to fail back through and come back into the range. So, so far, so good. Scenario one on the mark. Check. Then we have the beige book release, and then we get this drop. So now we enter into this environment where scenario one is complete. Scenario two is pretty much complete, except scenario two is looking for a push immediately, fall back in, and then just linger in this 41.32 zone, which is exactly what we saw here. But then we end up falling, and if I push forward here on the day, look at where it went. Look at that mid tag. What? So we had confluence of mid, OS low, and IB low in the 29.50 area, pushed through by 3 ticks. Just a beautiful tag in the mid. Many of you have heard of this as a setup. I look for a nice impulse continuation pullback, tag the mid on a higher time frame. This whole thing is one impulse, single pullback. This is the continuation. And where does it go? 41.13. Remember the 14 that in case you forgot, that I circled like this in the other screen. We went to 41.13 before stabilizing. We held steady. We ended up yesterday with a clean, clear double distribution profile. For those of you who attended yesterday's webinar, part of the reason I asked about yesterday's webinar is we talked about this exact setup, except the market is opening a lot higher than the low volume node. So here, what is the setup? This is a double distribution profile. This is the low volume node right here. You can see there's a confluence of RTH, full session, VWAP, RTH, full session mid, all in this 4130 to 4128 area. This is really important area on top of the LVN, and any initial test to this area is likely to set us up for a long with a very clear risk segment or risk pattern. So looking at probably somewhere a scale in entry between 41.30 half and 41.29 with a stop below 41.27. And then we would target 37. 37, so we're risking about 4 points for 8 points of return, a 2-hour setup, if not continue to new all-time highs. So that's the setup I talked about yesterday. This is the double distribution LVN fade trade. That's one of the setups from yesterday's video, the webinar that I did for the public, okay, for all traders. So that's what we ended up with. We had excellent volume yesterday, 1.33 million contracts in a day session. We have not seen that sort of volume in a while. Good activity, good rotations, and the market delta, the volume delta moved with price, giving us a glimpse into what it's like for selling to happen. Now, it's kind of amazing that we had some selling in the first place, but what we'd expect here is that the market would tingle with the 41.28 through 30 area in the overnight session. Let's move into the overnight session. So as you can see, scenario 1, scenario 2 both worked. The high, the anticipated high, and the anticipated low both were tagged and held. This is where we open up. This is the low volume node right here. You can see there's a cluster there, and it just pushed to it, pulled back, broke through it, pulled back to it, and then continued. Really not that much respect. And then we have this area that we've set up underneath us as a base for support for the long in continuation of the overnight trend. We have a double distribution profile, or multi-distribution profile really, but we have two distinct areas above and below that coincide with that 29 to 32 area. Just a lot of clutter in this area. Pretty good delta on this break later, and what we have is an impulse up, consolidate, flag really high, continuation, new all-time highs, and we're holding steady. Notice that yesterday's point of control, there it is for the full session and for the RTH, is also today's overnight point of control, right? That's not a coincidence. The market is essentially saying, we accepted these prices, we moved lower, we set up a second distribution on the low end, which is in line with this with this acceptance down here. And then what it did is, we had our value up here, we moved away from value, and the idea is it may attempt to pull back. We expect it to pull back to 130 and then continue to now repair a lot of these structures, everything below 4110 to 4104, and then all the way down to 4067. I mean, we have 100 points below us is where we last had good structure or good foundation. So it's interesting to see that, but keep that in the back of your mind. But what the market has done is it has said, you know what, we like that where we were yesterday, where we traded a lot yesterday, right up here. We still like that. We think the market, the the price of the ES is fair up here. And so this becomes a key area to watch, everything from 41.35 to about 41.39 today. So 35 to 39 becomes an important foundational piece. If I turn on the stock zones, you'll see that it's marked off. You see this? This is a stock zone, and this is a stock zone. Really important area in here coming into today. Okay, the volume's a little bit light at 179,000 so far, but still we have pretty good structure to trade against, and it looks like we have refuted the news that was yesterday's comments from the Fed, and we are pushing back to the upper end of the range. Let's talk about this for a second. Really important to see where we are. Yesterday, we ended up pushing down and then closing right on top of the acceptance price. So this is a new MC point of control right here. We're essentially holding this 41.20. Let me look up the point of control. I just marked 41.23 is the most accepted price in the area. That's pretty much where we closed yesterday. The actual pit close is at 41.2275, and we have basically formed a double distribution profile for the week, and we're holding still higher low on the weekly, but yesterday we ended up taking out the low, the daily low. So what we have here is on the weekly time frame, we have one time framing up, meaning the trend is up, very clear, and then the daily trend has been up as well. We're only looking at the lows for trends up, and we're only looking at the highs for trends down. We don't want the highs to be breached on a trend down. We don't want the lows to be breached on a trend up, okay? So we blow through the low, the prior low, and then we finish right on top of the MC point of control for the week and lower distribution, and then overnight we push through to the upper side. So we've put a pause on the daily time framing. So today it's important to see, does this blow through hard, meaning it pushes through the 41.50, the mid-century figure, and sustains that price, or does it push through a little bit and start to move back? If it starts to move back, folks, 41.23 becomes your big target with some support in the areas that I just talked about, 130, 128. 128. This looks like 73, but so this becomes the target on shorts. This becomes a key scaling area because we expect some support in this region, right? So this is the extent of it. The support is really the initial supports between 39 and 35. That's where that zipper cluster is. That's the area I'm looking to get long against this morning. But if it falls through there, then look for a slip through to 130, 128. And if that doesn't hold, 23 becomes a key target. So when you get in that trade, don't be that trading monkey that takes on a trade and then holds it for 3 ticks and then closes when you've done all this homework. Have a grasp and a grip on the big picture and hang in there for your extended targets as planned, right? Otherwise, you're just taking a lot of risk with very little return. So let's move on and look at what's expected for today. Setting up this chart here, master levels, stock zones. We're starting to see some pretty good structure here. Today's expectations. Okay. Today's expectations. Inventory is about 75% long. Expectations, we're opening on the upper end of the range, looking for response back down towards that the overnight point of control at 36, or 37. Again, this area here, the stock zone here, 35 to 39 is important support. Initially, pretty well-defined area. For those of you who've been following for the last, 11 years or 12 years or however long I've been yapping online, I've always said you want to trade against an area that backs you up, that makes it difficult for the market to just run through, right? And that's what I'm talking about. I'm talking about taking a long against a volume cluster or consolidation zone. It becomes difficult in most cases. Past performance is not indicative of future results, but in most cases, it becomes difficult to get in and then watch your stock get taken like that, right? The market has to work through a lot when it moves into these consolidation zippers, which have a lot of volume in them. So I'm looking for an initial push down into the 39 consolidation, and then I'm looking to see if I can find the long. In other words, if the market sets up a long for a test of 41.46 for the overnight stat, looking for it to move into the 50, the mid-century figure here. And then again, I'm looking for the market to falter and fall back in, same as yesterday. That's scenario one. New highs and higher lows to resume the one-time framing up. There's not much here that's telling us that the sellers have any teeth whatsoever. The sellers have no power as we stand here. The overnight lows too far, so the expectation is we open, we immediately drift up, as a lot of the people who traded down here yesterday are likely to come in and cover their stocks because they're likely to be weak shorts. So cover immediately, push to 41.46, then look for an impulse down, not just a grind down, an impulse down into the 39.35 area, slip through to 30 right here. 30 becomes important as I marked on the other screen. 30, consolidate, and that's the extent of it. If it doesn't stop here and bounce, which is what I would expect since the ranges have been quite poor, and we have some real selling, then we're looking at a push into, again, 41.23. So now we're looking at 23 as the extended target. Not likely. We're just not seeing that kind of action lately, but that's what I'm looking for. So in either case, look for that overnight stat to be taken. At some point, we either take it early and fall back in, or we pull back, set up a nice strong base, and then catapult, jump right through that high, and we have a little bit of a stronger case for the bulls, but overall, it's likely to peter out, okay? The market is clearly showing signs that it's starting to weaken on these rallies. Does that help? Hopefully, you're gaining something. Remember, a strong grasp on the narrative and volume profiling is what shows you where the market accepted and rejected prices. Candlesticks, bar charts, P&F charts, range bars, they don't show you that stuff. Only the volume profile shows it. It's just the nature of the beast. And of course, that translates into order flow on a much smaller time frame. So we farm our bias using the volume profile. Then we go to the action on a smaller scale to find areas where the market participants are disagreeing or fighting each other. And that's where we look to trigger our trades against areas that were predefined. Good luck today, and I'll catch you tomorrow. Take care.